Good morning, traders. It is Wednesday, the 10th of May, 2023. Thanks for joining me today. This is episode number 2466. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we go. We're looking at the Convergent Trading pre-market summary sheet. As always, I want to remind you that you can grab this right off of Convergent Trading's Twitter feed, which can be found at twitter.com/convtrading, C-O-N-V trading. This drops at about 8:50 a.m. Eastern every day. Big news today, US CPI was released. There was a lot of anticipation on this and some hawkishness really relating to this release. The market got a lot of relief this morning as it came in lower than expected. CPI, the key numbers to pay attention to, the inflation rate year on year came in at 4.9%, was expected at 5%, the prior's 5%, so the inflation rate's falling. Core inflation came in at 5.5%, prior 5.6%, in line with the consensus of 5.5. And then the inflation rate month on month took a little jump higher. On the other hand, it came in at 0.4% versus the prior of 0.1%. The consensus was 0.4%. And so this is the big one, right? This is the important news that kind of gets out of the way and lets the market auction under its own power. Biden meeting with McCarthy failed to yield significant progress on debt ceiling, so that the debt ceiling remains an overhang. U.S. President Biden said he will meet again with congressional leaders on Friday. ECB continues with hawkish speak on inflation. What's left for today? I mean, before the US CPI, we had inflation out of Germany, which came in line. It's also subsiding. Inflation rate year on year final for Germany came in at 7.2% versus 7.4 prior. Month on month came in at 0.4 versus 0.8 prior. So good news there. And then other than that, there's really nothing significant that came out overnight. And then what we have left is the EIA crude oil stock change. We're looking for a draw of 917,000 barrels. For gasoline, we're looking for a draw of 1.233 million. The numbers have been in a draw for a couple weeks now at least. So beyond that, we have several other pieces. China's CPI tonight is the next key figure. Okay. So the Chinese inflation rate year on year is expected at 0.4%. That comes out at 9:30 in case you happen to be trading at that time. So this is where we stand. Looking at the S&P is in a very clear trend now. Multi-distribution profile. It was actually off. It was actually selling off from the time that Europe came in. Again, Europe opens. That happens at 3 a.m. Eastern, 2 Central, and the sellers came out to party, and they basically took the S&P from that just big battle area yesterday, 42, and took it all the way down to 41.20 for the low a day, and then it consolidated at the VWAP and the VWAP and mid before the CPI changed the entire picture and turned it into a multi-distribution profile. So we've done quite a bit of volume, 287,000. So we're in line with our mode for volume for the last 252 overnight sessions. The inventory is 37% long, so it doesn't show too far an imbalance. The range is 48.5 points, which is fantastic. And the point of control at 41.50. That point of control at the 41.50 is actually very much an iceberg. So if we look at what happened here, you could see the 41.50 strike was highly hedged. This setup here, we pushed to it. pulled back, came right back to it. This was an incredibly weak high that finally broke through, pulled back, and then once we came back to the high here with a double top, we saw a lot of buying right before it, and then boom, it popped out, and we went to 4170, which is our next stock zone. Next area that we expected the market to check. Why the 4170? It is right in here, 4170. This is your next key zone right here. Let's see if I can draw a rectangle properly. Oof, this may not come out too well. Oh, sweet. Look at that rectangle. That's a beauty. So this is expected to be resistance. In fact, I should probably get rid of that and just put it in here. This is an easier tool to use to draw the rectangle right there, and it'll stay in place. And in fact, we can template. Oh, I had templates, but I guess they got wiped. I'll template that as key resistance for now. This is where we are now. This is where we are now. Once we break through this 4170 area, we have 4180 and a quarter as a naked point of control right here. That's the next key tested, and above there we get into this zone right here. And that's what I expect to be the target for the day, this 4185 area. So 4170, expected that to be a battle zone. This chart is ES RTH only, as it says in the top right corner, so we're not seeing the overnight action, but we can see where the market is right here with this dashed line and the white tag on the right side of the screen. We're moving quite methodically. If you recall, the 4150-53 area is the MC point of control. This is volume point of control, which is where we had the battle, and it's where the overnight point of control is. 4150 and a quarter was last week's close. 4150 plays a lot of roles here, and it did in this overnight session as well. So this is how things look like. We can see sellers starting to come in here with the delta, with the big red dots, the delta running flat here. There's not there's the lifting versus the hitting is getting bounced or is flattening out, and against a key resistance area. This is an area you'd want to scale. If you were long, you'd want to scale ahead of. Okay, so that's that. Note that after it took out it splashed up, it came right back to the mid, the full session mid, which falls on the 4135. Remember that number, 4135? Came right back to that for a retest. So what I'm getting at here is that the trade is relatively technical today. I expect it to yield some pretty decent opportunities. This is a day where you want to eliminate distractions and just focus on trading. We have a week high of 4169 currently in the ES, and in the overall picture, the bigger term picture is that we are still, we've moved to the other side of the 4153 balance, but we are still in April's balance. So let's not go nuts here and think that this thing has resolved itself. It's very likely to stall out and come tumbling back to 4150-53 at some point in the next few days. So it's just, this is a very likely scenario. We move away from the MC point of control, we come back to it, we fall below it, we come back to it, and so on and so forth. But one thing's for sure, we established what looked like one-time framing down yesterday. We had an inside day. Monday, we had a terrible trading day yesterday. It was just awful. It's like one full stop out, no opportunity to come back. We settled at 41.34, right up against that 35 zone, and now we're a lot higher. We're gapping pretty strong. This is gap rules apply today, so you want to pay close attention to paying close attention to how it responds on the open. The expectation here is that we'll get responsive selling. We're likely to get responsive selling on the open. So we open up. The expectation is we are likely to push back at least a little bit, and we have a temporary high here at 4160, 4160 really. 4160 or so, consolidate, and then I'm expecting it to start walking itself up to that next zone up between 77 and 82 right in here. Okay, and then expecting it to rest. That's the primary scenario. The secondary scenario is it opens, the laggards buy, it pushes higher, takes out the overnight high, bumps its head against, the same resistance we're stuck in, and then we start to get an impulse down. This is important. And if we do get an impulse down, the key target is 53.50 on the short, if you can catch it. And then the expectation is it's likely to just linger right here. I don't expect it to close the gap zone or the external gap, and I don't expect it to push back to settlement. Be nice if it did. Okay, so that's where those are the main ideas. The key of which is that we are still in balance. Okay, we're still in balance. We're fighting this zone. Let's color these just so that I can mark them. Resistance. Okay, let's color that, make a template out of it, and then go and apply the same template to this one. So I'm going to keep those zones on there for a little bit so we can keep monitoring them. Low volume node. Oh. All right, I need to figure out how to grab that. Oh, it's locked. That's why. Yeah, I locked it. Boom. Okay. So, so those are the key things. Below us, you're looking at again the 53.50, and I'm not expecting it much below that. A lot of battling down at the 50. So this is expected to continue on the way down. There's probably a lot of there's huge gamma wall there now. So we'll see what happens there. Looking at the NQ, here, let's look at the NQ in the overnight session. NQ doing its thing. Same story as the S&P. Came in weak and then just drifted back up. It drifted stronger back up and then took off on the release. It's important to note here that this 13,320 marked with the stock zone here is becoming significant. This is going to show up again and again going forward. We do have our key resistance up here at 13,350 or so. We've broken through that and we are pushing right out. So the Nasdaq really is, as we've talked about before, is really quite strong. It's trading up here at 13,400, and it has already taken out the equivalent of the S&P 4206. 4206 in the S&P. So the Nasdaq is a lot stronger. Money is flowing into the Nasdaq much more easily, and it's just you're not going to want to fight this bull today. If you're trading the Nasdaq and you see short ideas, unless they're very short term, I would filter them out. The market conditions do not favor those at all. What else is there? Crude Crude finally pushing towards that 74 I've been talking about. So we have, this, I talked about this yesterday. This rectangle here from crude, that's the current resistance right there, and we're pushing up against it. If it does get through, then I'm looking for the 77 retest right up here, and I'm expecting that to be quite formidable. So crude is likely to come back above the 74 and balance between 77 and 74 for quite some time. We do have a clear rejection down here of these prices. We saw a spike down, a flush and return, and that's likely to remain in place, in my opinion. Okay, so that's it. I'm going to leave you with that. Good luck. The Russell. Here we go. So let's look at active Russell. This is the big laggard. Russell is the big kind of is the product that has been just beaten up to pieces. The Russell is back in the middle of its balance, right against this 1780 key area, right in here, which is the mid of this balance area. Next key area up is 1796, 1800. It has a long way to go to break out like the Nasdaq has. So the Russell has made some headway. It's been an awful kind of sluggish laggard, but still, it's still in the same position as the ES. Okay. Good luck today, and we will catch you tomorrow. Take care.